Welcome back to Market on Close. It's time for Options Corner, so I'll bring in Kevin Green joining us to let us know what levels he's watching as we head into the close today. You know, KG, what are you keeping an eye on right now?
Well, the fact that we were able to break above that 6,400 level and continue to move higher here, I think it's actually a very critical area here for the S&P 500. And kind of going into the close, you want to be able to maintain the 6,440-ish area. This morning we kind of highlighted 6,430 as that major area of resistance, but we were able to kind of push beyond that. And you're actually looking at the 6,440 calls right now. There's over 145,000 that have traded on today's session. So a significant amount of exposure here pretty much at these levels. You are seeing some traders trying to get at the 64.55-ish calls. Those are going to be a little bit difficult in order for us to kind of break up and break out, but this has been a very strong trend. Maybe we get a little bit of a squeeze going into the close here. And then if we are able to see any type of breakdown here, you want to see 64.30 as your first area of support, and then we want to be able to hold 6,400. But this has actually been a textbook day. We opened up fairly strong. If you look at the pre-market session, we had a little bit of a check back to that 6,400 level, a very strong hammer candle, and we've been off to the races ever since, pretty much trying to stay within this channel line. We haven't seen a full-on breakdown yet, but holding on to these levels right now, Marley, is really the key. If we have any further upside, obviously that's going to be icing on the cake, but just maintaining this current level at 64.40, I think would be a really big win here for the bulls today, and really sets us up for a follow-through day tomorrow and really trying to break out of some technical structure that we'll talk about here in a second.
And all of this in response to the CPI, PPI numbers that came in this morning, right, Kevin?
Well, yeah, the CPI numbers definitely. I think there's also some other commentary and some items that have taken place here in the market when you're looking at the news flow. But overall, it has been the CPI number, given the fact that we did not see very aggressive goods pricing for the most part, probably lower than the street's expectations or the whisper number that is out there, and the fact that we probably will still be on the same trajectory as far as a rate cut in September of 25 basis points. So just given that environment, you saw actually some early cycle behavior, meaning you saw actually yields move a little bit higher and then money being put into the equity market. That's really what you'd like to see. Risk off days, individuals go into treasuries, they sell out of equities. Risk on days, sell out of treasuries, going into equities. That's exactly what you want to see in an early cycle behavior, which is what's going to happen eventually as we get these rate cuts priced in, as well as kind of realizing them over the next couple of months here.
And I've been looking at, the FedWatch tool. We're now almost at a 95% price in for September. So that's the highest that I've seen so far. As far as volatility was today, what did the VIX look like?
Yeah, I mean, volatility, if you're looking at the VIX, it did go below that 14 level here. We actually have been inching up over the last, let's say, 30 minutes or so. That's not too surprising, given the environment that we are in. Probably a significant amount of calls being bought. That's also kind of skewing volatility right now. What you do not want to see is a rapid re-rating to the upside going into the close, and then subsequent selling in the equity front here. But if we're looking at the VIX minus the VIX futures contract, knowing that we have a 14 VIX, it does seem a little bit cheap. But if you're actually looking at this spread here, we're not at really low levels when it comes to this contango or this normalization, just meaning that the spot VIX, VIX, is priced lower than the front month VIX futures contract. And so if you're looking at that term structure, that actually looks pretty decent right now if we're able to kind of stay at these particular levels. If we start going a little bit lower than where we are at right now, just meaning that the curve's widening out, and we start getting to that standard deviation or that one standard deviation move sitting at around negative 2.5 or so, that's where you get a little bit concerned that we have a little bit more of a re-rating to the upside. I still think vol is still fairly low, but when you're looking at the term structure, nothing seems to be out of place at the moment.
And, what are you keeping an eye on the other parts of the day? Did anything else stick out to you?
Yeah, so if we're looking at the E-mini S&P 500 futures contract, you can do the same thing when it comes to the S&P 500, but the futures has overnight pricing here. The reason why this is actually very critical for us to at least try to maintain this level here, we have this kind of wedge pattern taking place, and you're really trying to see us break above that. We're pretty much hitting the upper end of that resistance level right now. It's a previous trend level that we actually did fail. Now it's acting as an area of resistance. You want to break out of that and now have it as an area of support. Hopefully that happens over the next couple of days here. You still have a bearish divergence on the RSI that has not corrected itself yet, but as long as price continues to advance, hopefully on larger volume, that gives you a little bit of confidence that we can continue to move higher here. But we're pretty much getting very close to the apex of this triangle. I would say another day or so if we still stay within this range. But what you would like to see is a nice little move to the upside, 0.4% to the upside on the S&P 500 probably will break us above, and now leveraging that area of resistance as an area of support. And then that gives you a little bit more wiggle room to the upside for all-time highs. And then the next major area of resistance for the S&P 500 is around 6,600 or so. So around 200 points to 150 points away from these current levels. So nice day. You want to be able to hold on to it and see a confirmed breakout over the next couple of days.
Well, we're almost there. Thanks for breaking that all down for us in Options Corner, Kevin. And we'll see you shortly in a bit when we break down CoreWeave's earnings. But coming